All right, we are live. Welcome to this RTD Q&A. Excited to have back a returning guest, Mr. Gregory Mannarino, traders from traderchoice.net. Greg, how you doing, my friend?
I am doing great, and I really am happy to be back with you. Finally, it's been a while, but this is exciting for me. Believe it or not, it really is exciting.
Yes, it is. So actually, before we went live, I just wanted to share with the audience because it's been a while. And so one of my very first interviews happened to be you when it came to the live streaming. And so going back in time, here's a little clip from my initial setup when I was just beginning with the live stream portion. And I was looking over my shoulder. And at that time, the national debt was $19.8 trillion. And it says the dollar to silver ratio was 885 per ounce. And here we are now. If I thumb over to the latest figures, we're at 24.2. And the dollar to silver ratio is $2,300. So a lot has changed since we've last spoken on this live feature.
Yeah, a lot has certainly changed. It's going to change a lot more. There's no doubt about it. I mean, look, what we have now, we don't just have exploding debt. It's parabolic. Mm-hmm. We've gone absolutely, completely straight up and it's going to continue that way. We're going to see debts. And I've been telling people this for the longest time. Deficits are going to explode. Well, we're here now, and it's actually going to get worse from here. What we can expect is the Fed's balance sheet, the one we're allowed to see, to vastly expand as we move forward here. I mean, look, they're fulfilling their end game to be the buyers and lender of last resort. Multi-decade plan to be above that pyramid. They're here now. They're funneling cash around the world. No secret. Everyone's got it. People know what's going on here. And again, nothing has changed for me since I've been out here for over a decade explaining to people, bet against this debt, become your own central bank, hold a hard asset, or hold anti-central bank units or non-central bank units. And I've become quite a proponent of cryptocurrencies. Yeah. So I think people need to be holding these things too. And then if you are so inclined, like we were talking about before the interview here, trade the market. But you got to stay so ahead of it. You got to immerse yourself in it. I tell people in life, no matter what you do, I don't care what it is. You wash dogs for a living. Well, if that's fine, no matter what people do, but you gotta become that thing to be the best. You want to be the best at what you do. And I don't care what it might be. In order to be the best at it, you have got to immerse yourself in it. You got to become that thing. It can't just be something that you do. It has to be something you are. Yeah. And I mean, that was me too. I mean, I practiced medicine for 20 years. Mm-hmm. I wanted to be the best at it. I wanted to be the best clinician I possibly could. I think, I don't know if I was the best. I think I became the best I could have. Was the best clinician ever.
You reached your potential level. You reached your potential is what you're saying.
Yeah, you reach that potential. You try to make yourself the best. Don't, try to be better than anybody else. Although I'd like to. I always strive for that in life. I always want to be the best at something here. And I think in the environment that you and I are in, trying to educate people, people understand what's going on. We really do have to be the best. We have to be on top of it more so than anybody else. And that's how we make a difference in people's lives. And that's really all I want is make a difference in someone's life, a positive experience for them, let them understand what's going on. It's just like you, same thing about you and me. We make a positive difference in the world. This is how we do it.
All right. So I want to touch on, and so as always, for those that are tuning in, appreciate you for taking time to join us. And I just want to acknowledge a super chat here. And so Mr. Andy says, Greg the GOAT. He says, thank you too. So I appreciate you, Andy, for that love offering to the channel. And so you talked about, I'm going to put it on the screen because you mentioned the Federal Reserve balance sheet from what we're able or what we're told. Wow. And so we see this right here. So are you hinting at that this could be just, that this is the front of what they're showing us, but yet it's probably exponentially a lot higher than this? It's basically what you're kind of hitting at a little bit.
Well, first of all, I haven't seen this chart before, but that's exactly what I'm talking about. It's gone straight up. No, you have to understand this. And I don't think many people do, unless you're a real Wall Streeter, or if you understand what they do here. All companies have two balance sheets. They have the one that they allow you to see and the one that you're not allowed to see. The one you're showing here from the Fed, that's the one we're allowed to see. Okay, there's an entirely new balance sheet on the other side of this. The stuff that's hidden from us, the stuff that we're not. It's not our pay grade to see.
Yeah.
And this is the same thing going on with corporations and banks and everything else. So people need to understand. In fact, probably all big corporations and banks have at least two balance sheets: the one we're allowed to see and the one they hide from us. And we just try to make the best of it here and understand that the whole thing, and no one knows this better than you, is not real. It's completely fake.
Yeah. No, so as we're talking, I got all types of questions I want to ask, but I'll eventually open up to the audience. But I want to share with you an article that gives the timeline that we have witnessed thus far of the response from the Federal Reserve Bank. And this is as of today. And says March 3rd, emergency 0.5 percentage point interest rate cut. On the 15th, another 1% cut on the 15th of March. At the same time, it says that they cut the reserve requirement ratio for banks to 0 on March 17th, and the first of slew of measurements aimed at keeping credit slow, the debt, whatever. So here's a timeline of all the events that have taken place over the last couple of weeks. And as of up to April 9th, the coup de grace of $2.3 trillion lending program. And so that's all within the last couple of weeks. Now, this 2.3, once again, it was touted as being historical. It's never happened before, historical aspect, as if that's like a good thing. But yet, that's just for April. Will there be another 2.3 coming in May? And, so let's play through some scenarios of what you see coming based upon what we know has to happen.
Sure. They have this is their end game. This is their final solution. I've been using those exact words since I don't know how long, regarding the new world central bank. The Federal Reserve is now the new world central bank. They are funneling cash around the world to the tune of trillions of dollars here. Again, this is what we're allowed to see here. Their repo scam went from 50 billion a day to $1 trillion a day. I told people this was going to keep going up. I had no idea it was ever going to hit $1 trillion a day, but that's where we're at now, $1 trillion per day. They said, oh, this is temporary, we're going to unwind it. Yeah, nonsense. I told people the first day this came out that it was going to continue and expand. That's what they're doing. The Federal Reserve, the new world central bank here, has for many, many decades been trying to become the lender and buyer of last resort, to own it all. And so in this environment where we have a dead economy on a global scale, I mean, we're dead. There's no economy anymore. We're dead in the water. We're frozen in time. The Fed can print all they want right now because there's no money velocity. Okay, so right now they can do what they want to do. Is there going to be a price to pay down the line? Absolutely. Or they're going to switch to a new system, which I really do believe is in the work. This is why they're dollarizing the world. But whatever the Fed is doing now, 2.3 trillion, whatever trillion, expect this to continue in greater and greater amounts. The Federal Reserve is funneling more than this directly to the Wall Street banks. The Wall Street banks are buying the market. They're buying stocks. And the Federal Reserve has got the entire debt market covered. They're buying every single aspect of the debt market. There's not one part of it that they're not buying. The Fed is even buying foreign debt. Everything. They're buying it all. This is their end game. This is their final solution. So whatever they're telling us they're doing, it's going up, just like from 50 billion to 1 trillion per day in their repo operation here. And why is all of this going on here? No matter what they do, they can repo, and they're repoing with other central banks around the world but they're flooding them with dollars. I think this is common knowledge by now. I've been covering it. But they're trying to fill a black hole, which they can't fill. And there's a liquidity crisis coming down the line here. Either that or we get a completely new currency. And I think that's where we're going here, to a totally digital, one world currency at one point. And the Fed is doing everything they can right now to make that happen by funneling all these dollars around the world. It's a crazy situation that we're in. And how much can they print? As much as they want right now. They can do whatever they want because there's no money velocity. The rate at which cash moves through an economy, which we don't even have one, is zero. So there we go.
So what do you think might break that confidence where the velocity would pick up? and to where it becomes obvious that they're counterfeiting money. They've already weaponized the dollar, as I mentioned several times now. They've weaponized it. They're trying to buy up everything. At some point, something has to give. Something has to snap. Would you say?
100%. It's the same thing I've been telling people since time in freaking memorial. It's the debt market. The debt market is a time bomb. The debt market is ticking and ticking and ticking and ticking. But all of us, people that follow my work, have been watching the bond market like maniacs, I think, because all I do is shove it down their throat. But this is the key. The bond market is the key to this entire thing. We have a yield curve. We don't even have a curve. It's flat. It's part of it's inverted here. The debt market has been screaming for the longest time that something very bad is coming down the pike. Now, suppressed rates have caused the largest bubble in the history of the world to develop. That is the debt bubble. I think we're all on the same page with that. That's reinflated a housing bubble. This has reinflated a monster stock market bubble. But you have to understand that this mechanism here, where investors, whoever's holding this debt, they're earning nothing. They're guaranteed to lose purchasing power. At one time here, no matter how much fear, because that's what this is, when fear pervades the market, you see yields drop because cash makes its way into the debt market. The Fed's buying all the debt, by the way, as well. They're also buying treasuries. We know that. They're buying municipal debt. They're buying junk bonds. They're buying corporate debt. I mean, you name it. Okay. But at one point, see, the debt market is so big. It's a monster compared to the stock market. I don't think people realize that. So what's going to end up happening here is the same thing I've been outlining for the longest time. We're going to get an uncontrolled sell-off in the debt market where yields spike very rapidly. The Fed is trying to maintain control right now. They're buying what they can. They're buying it all. But if other nations around the world, investors say, why would I be wanting to hold this unit of debt, which I'm guaranteed to lose purchasing power? I'm just going to dump it and throw my cash into some other thing. We're going to get that big sell-off in the debt market. Rates are going to spike. That cash is going to start rushing out of the debt market, which is going to have the opposite effect that we've seen in the stock market. Stocks will melt down. Cash will leave the debt market. Cash will leave the stock market, and it's going to look for places to go. That's when money velocity is going to start to kick up, and we're going to get massive inflation. If they can, I don't know what they're going to do to try to prevent this scenario, but this exact scenario, it's not just me explaining this anymore. Although I did it way before Alan Greenspan's picking on it. Alan Greenspan, former Federal Reserve chair, said this exact thing maybe 2 years ago. I almost fell out of my chair. I'm like, he must watch my work, because this is what I've been explaining to people. This is how it's going to play out at one point. But for now, especially in this current environment, they can do what they want to. The bond market here, the 10-year yield, I always watch the 10-year yield. They tell everyone to focus on it. If you look at what happened today, for example, this is live, right? So today, the debt market, the 10-year yield actually came up. It went higher fractionally in an environment where we had stocks sell off, not to any great degree, but that tells me that there's probably more gains for this market moving forward, despite the fact that we just lost 17 million people in the workforce, millions more to come here. We have an economy dead in the water. Yeah. But this is where we're going. It seems that now we're in that inverse relationship, that the worse the economic news is, the higher stocks are going to go. I know we're going into earnings season right now. And people keep asking me, Greg, what do you think about earnings season? Well, I keep saying, well, look at how the market has reacted to millions and millions of people being unemployed. It's gone up. Well, we're probably going to get the same scenario with this hideous, and it's going to be hideous, earnings season going on here. The market's going to price it in. It's going to think the Fed's going to backstop it all, for which they're trying. They're trying to stop the bleeding here in crude oil. President Trump apparently trying to made a deal with Russia and OPEC to cut production 10 million barrels a day. It's a joke. I told everyone before this, weeks ago, I said, this is a zero. It's a big, fat, ugly zero. It doesn't matter what they do. We have a supply glut that is just beyond belief. So anyone that understands supply and demand would say, well, you could cut production to zero. It doesn't matter. We have a huge glut. But the president's touting this as some kind of a great deal. You got to be out of your mind. I can't believe he doesn't understand supply and demand issues, but that's exactly what he's saying. And he got promised today another 10 million barrels to be cut. I don't care if they cut it 20 more million. It can make a difference. There's too much oil. It's insane.
Interesting. So while you're talking, we have a question here. And actually, before I get to this question, I want to pull up some of the things you're referring to. So here on the screen, just from the Federal Reserve website here, here's the M2 supply here. And of course, within the last couple of weeks, we've had a spike. I think I heard something about 10%, which is this little spike here. And also, along with that, is the velocity of money, which you refer to often.
Look at that. Look at that.
It's at, extremely low. The lowest has been ever,
God, man.
according to this graph here. So
I've never even seen this chart. I mean, but you don't have, this is incredible. I'm glad you're showing this.
So this is, so just to show some visual aids to what you're describing. So I want to now get to this question here because I think this is a good question. And of course, it's more opinion-based. But this is from Henry Brown here. It says, shout out to my boy Gregory Mannarino and the Q family. I'm just joking. But question for Gregory, what is your thoughts on the country reopening in May?
I think they want to try to keep it closed as long as possible because the main effort here is to destroy American small businesses. I don't care what's coming out of their mouth. I know for a fact that in corporate war rooms, they've been talking about culling small businesses here in the United States for years. This is their opportunity. Corporations don't want any competition. They don't want the small businesses. They don't want the mom and pop shops. They want them out of the picture so they can, just take over here. That's what they're doing. This is a corporate horror show here in the United States. The merger of corporations and this new American government we have right now, it's fascism. That's what we have here, and they're going to destroy the small mom and pop shops. I mean, come on. Why does the Federal Reserve have a direct line of credit to the Wall Street banks? They get anything they want, unlimited funds. Meanwhile, these small businesses here in the United States, they got to apply for loans, which are not easy to get, okay? Because it's a game. The Federal Reserve could establish a line of credit that every single small business can tap, but they won't do it because that would save the mom and pop shops. That would save the small businesses. No, they want them dead and they want them buried, period. Opening in May, we'll see. They're going to push this as far out as they possibly can because this is a mechanism, again, to bring about that two-tier society that I've been explaining since forever here. Extreme haves, extreme have-nots. They got a boot on the throat of whatever's left of America, and they're going to push harder to choke off every bit of life you can possibly imagine. This is a horror show that we're in right now. It really is.
Yeah, and so along with that, of them wanting to extend this thing, the unemployment will ramp up like never before. So we're at all-time highs and all types of things. It's not good for our country or economy, period. And so as of each week now, there's all-time highs and unemployment. So if they continue to keep the boot on the foot of the people, therefore, that's going to lead to even more unemployment while they're trying to give out some type of stimulus check, $1,200, $500. So from as a result of this, do you see UBI being something they're going to try to throw out there if this goes on to several months or what?
Well, like I said, I think they want to drag this out longer. They're throwing out crumbs to people. Here's $1,200. Be satisfied with what you get. Are you kidding me? $500 per each child. Are you kidding me? Where does this come from? Who came up with this asinine scheme here to try to pacify people here? I think it's a crime. This is a crime in progress. It's not going to change. It's going to get a lot worse, and they're going to drag this out for as long as they possibly can. They don't give a damn about you, me, or anyone else watching this interview right now. This is a totally different ball game. Even with regard to these markets, I've been telling people, I did several videos about it. Forget about anything you thought you knew about this stock market and its relationship to our economy. It don't matter anymore. When you have this kind of a situation going on, nothing makes sense. Nothing will make sense. Nothing made sense before. Now, since this, it's even more off the Richter scale, unfreaking believable. But we're going to see things coming down the pike here, and that we're just not going to believe. And I'm just hoping that people like you, me, and the people that are listening to this right now, what can we do to make a difference? Is maybe just get the word out, try to make people understand, but they won't. You see, that's the mechanism too. People here, first of all, they're debt slaves on an epic scale, which makes them which takes their mind into a different place. They can't focus on things that are important if they got to worry about feeding their families. Okay. So, people that are sitting here watching this blog, I think this interview, they're more awake than most people. They already got it. In many ways, we're probably sitting here, preaching to the choir. And in many ways, this is a natural selection that's going on. I've been explaining this to people for the longest time. There are those of us, you, me, the people here that are involved, that are able to see a little further down the road than most people, that are indoctrinated. They're stuck in this way of thinking that's completely in the box. When they get thrown some kind of a curveball, they know what they do? They react in an angry way against people like yourself, people like me. You can't disturb their quiet little neighborhood that they have in their brain, that they think is real. If you try to interfere with that, they go crazy on you. People need to believe in something. And if you try to show them the truth, if you try to tell them that water is wet, they won't believe it. But this is the environment we are in. And this is how they're taking advantage of all of us. It's completely, it's insane. It really is.
Yeah. Now here's another question here. A little super chat from Archie. It says, what do I trade silver for when the time comes? How does the population bubble fit into that?
Well, look, this transcends a lot of things here. When I look at silver, when I look at physical silver, and I look at physical gold here, I look at these things as real money, things that have had wealth for thousands of years, and no central banker is going to tell me that they're not real money, like Ben Bernanke did. You remember when he was asked by Ron Paul?
Ron Paul.
It's just totally insane. So look, I don't know what you're going to be able to do with your physical silver in the end, but at least it will help preserve whatever wealth you might have now in whatever comes down the pike. There is going to be a new system one way or the other. And that piece of silver that you're holding is going to hold value. In fact, it's going to go up exponentially moving forward, in my view. I can't see this another way. That's how it's going to go. That's why we need to bet against the debt and become our own central bank. Period. The end. That's why I've stressed to people so strongly that you need to have your hands on some of this stuff here, even if you can just have a little of it. I know not everyone's got means to like load up on it and buy monster boxes and stuff like that. You don't need to. That's another thing. People don't really need a lot of money to get by. People don't need to be rich, drive a super fancy car. You don't need all that. You just need to be able to sustain yourself in a way that keeps you sane. You know what I mean? Wanting and wanting and wanting, that always gets you into trouble here. There's no doubt about it. If people got to learn to live within their means. I think we're exiting the age of excess right now. I really do. We've gone from some kind of insane level of excess to where we are now, where we're prisoners in our own homes. It's completely insane.
Are you surprised about the shortages that bullion dealers and coin shops are having now? Like the fact that everything's closed down, mines are closing, some are open up, some are not. But are you surprised that there's going to be a supply issue, if not already?
I knew this would happen at one particular time. I feel bad about the premiums that people are having to pay right now. For some, if you can find physical gold and physical silver that you can get right now, the premiums are pretty outrageous. But you know what? You got to pay. You want to play, you got to pay. Yeah, that's the truth here. So you're going to have no choice, but don't wait for these premiums to come down, because I don't think they're going to.
I don't think so either.
No.
At this point, I tell people, is no premium. It's too expensive to preserve and to protect yourself at this current point, given the fact that I don't think there's going to be a restocking of the shelves for bullion dealers as plentifully as it has been in the past, because of the world now waking up to the issues we're having. So
you're absolutely right. You're 100% right.
Here's another little question here. A couple more minutes, Greg, and then we'll dial back. It's Ben says, is there a good country or state to flee to?
I think, these stupid commercials that we've been seeing lately, we're all in this together, the brainwashing. I don't really think there's anywhere to run here. This is a global phenomenon. This debt bubble that we're in right now, the new central bank, the Fed, with their tentacles everywhere. I mean, maybe if you move to some third world country where people are becoming, live off the land and raise their own livestock or something along those lines. Look, I wouldn't know how to do that. I wish I could. I don't think there's anywhere that you can say is completely safe as this new world order, because that's what this is, evolves. It's going to continue to evolve, and it's going to get more horrible as we move forward. I really believe that we're going to see changes made to the Constitution here of the United States.
Mm.
This is a new America. This is a new government philosophy that we've seen now, the merger of corporations and this government what we have here, same players, but this is something that's been in the works for a very, very long time. And they have us locked up in our homes while they issue this in. It's kind of an incredible thing to watch. So, look, hunker down, be prepared, make friends, get together with like-minded people, join a group where people are like-minded, can put this together for themselves. And there's a lot of people, I'm sure, that would be willing to do something like that. But and that comes down to where we're talking about the financial markets, which is all well and good, but this transcends all of that, man. We gotta realize, again, like I've been saying forever, we're not each other's enemies. We gotta love each other, care about each other. We gotta be charitable. We gotta realize that we're one family. I don't care what religion you are, what color your skin is, whatever your beliefs are, don't matter to me whatsoever. We are one family. And we're not each other's enemies, despite the fact that we have our politicians, all of them, trying to put us into a box and tell us who we're supposed to hate. Are you kidding me? What is this? What kind of twisted world is this? That's what I want to know, really.
Whew. Another looks like another fan of yours. Greg says, Matthew says, Gregory is the best trader I've ever seen. So do you think plant seeds will be traded for silver coins?
Why not? You want to send me? I'll sell you anything you want. I have all kinds of assets for silver or gold or whatever you want here. Absolutely, I think people should start transacting outside of the bills that we're told that we have to use. That our politicians want us in. That they don't want us in a cryptocurrency. That they don't want us in gold or silver. No. They want you in a Federal Reserve note. In a Federal Reserve note that you don't even own anyway. It's owned by the Federal Reserve or whatever issuing central bank, plus interest that they print out of thin air. It's a sick system. It's a completely twisted.
Yeah, I remember as I was, to start off how we spoke years ago on a live stream, and at that point, the cryptocurrency market cap was 52 billion. That was well before that 2017 spike. And so a lot of people on the channel are precious metal enthusiasts. Some are open to cryptocurrency, some are not. And so for those that are not realizing the opportunity of using it as an escape valve out of this current debt system, what are some benefits you think that the cryptocurrency sector could provide opportunities for people at this current point? Especially as gold and silver become scarce to where you can't really get your hands on some, or however that play out. Would cryptos be a good alternative for some people?
This is how I look at cryptocurrency, okay, from several perspectives, but we'll outline maybe a couple here. Number one, these are non-central bank issued modes of transaction that you can use to transact. Okay. I have a BMW dealership not too far from my house that says we will accept Bitcoin. You can buy a car over here. You see signs all over the place, accept Bitcoin, accept this, that, and the other thing here. So I personally think people need to be out of a government issued note or a Federal Reserve owned note. You don't even own the dollars you have in your pocket. They're not yours. Right. When you hold a cryptocurrency, it is yours. You own it. There is the big difference here. Now, with regard to cryptocurrencies being used as a real mode of transaction, the problem is this. They're not stable. If you notice, I was telling people to buy Bitcoin at $3,700. We're at near 7,000. I think it's going to 10 very soon. So it's not stable. And I personally don't want it to stay stable. I own most of the big ones. I want to see them gain in value too. So they're speculative. I understand that. So there's a lot of other ways you can look at a cryptocurrency as well. For me, it's opportunity. It's opportunity to increase wealth one way or the other, then convert that into other things. That's kind of what I do. I'm almost like a machine in many, many ways. I trade these markets. I try to make more of these fiat bills out of it, and then I convert that into other things. You know what I mean? You got to pay your rent. You got to pay your mortgage. You got to pay your car, whatever it might be. So yeah, we do still need some of these bills here from the Federal Reserve that they own. And we need to transact in them because that's what we're told to do. But I'm all for people transacting in gold, in silver, in cryptocurrencies, and bartering. And maybe I'll do this for you, you do this for me. It doesn't have to actually be in a currency either. We can be currency to each other. You know what? I'm going to go paint your room for you if you go mow my lawn. This is what we got to start doing here, relying on each other that way. But this, to me, when I look at these markets, everything, every piece of it, whatever, I try to find where there's opportunity. Okay, and to me, I see opportunity in cryptocurrency. I obviously see opportunity in precious metals. I've been talking about it for over an entire decade. I obviously see opportunity in the markets too. Just trying to find out where to put your cash to work. It's a game to me. It's a challenge. I want to be better than the next guy. I want to make my decisions better than he or she. I'm not always going to be right, but over time, if I'm right most of the time, it'll work out. That's all I ask for. All I ask for is to be right most of the time. And I think for the people that follow my work and my calls, they have to say, wow, Greg's pretty spot on with this. But that's only because I work so hard at it. Like we were talking pre-interview. Yeah. I'm no smarter than one other person on this planet. None. I just study it all the time.
Yeah. Now, as we draw towards the end of this discussion, I want to look ahead a little bit. And so we're only in April. And 2020, and God knows what's ahead of us, but hopefully we'll pray for the best. And so we have a presidential election year. It looks like Trump versus Biden will be the campaign that's going to be underway now. What are your thoughts on that? Like, clearly it doesn't matter whichever wins. I don't believe, because we're still going to have the same outcome. But yet, could one outcome be more favorable than the other?
Donald Trump's going to win, hands down. He's already been chosen, in my view. He's doing everything told to him without any doubt here. He's definitely made the rich richer than they have ever been. Barack Obama started over there too. Donald Trump took the playbook right out of his hands. Although he said he wasn't going to, he was going to do other things. He talked about how the Federal Reserve was artificially supporting him by making him look good by suppressing rates. President Trump's calling for negative rates over and over again. We all know that. So, look, that's how I see it going. Look, presidents are chosen before time. I don't think Biden has a shot in hell here unless something, a miracle would happen. Unfortunately, and like you said, also, I don't think it matters who sits behind the Resolute desk. I told people today in my video, my post-market, that it could be a farm animal sitting behind the Resolute desk, and it wouldn't make any difference because the banks run the entire show. People got to understand the world is not run by kings, queens, monarchs, or dictators or presidents. It's run by the 1%ers. They call all the shots. I call them the vampires. They are the ones controlling the entire world. President Donald Trump has done everything possible to make sure that the CEOs of these corporations get more rich than they've ever been here. It's continuing to funnel money into them, making sure the Fed keeps rates suppressed, those stocks keep going higher. Where's all that capital? It should be going into the hands of we, the people, but it's not. Via this mechanism of suppressed rates, we're getting robbed blind. And then he's calling for negative rates here? You got to be kidding me. He is the obviously chosen one for the New World Order, and he's playing right into it. This is why he will win the next election.
Whew, all right. Well, as we draw towards the end officially, for those that might come across this video for the first time, those that have the same thought process of the retirement narrative prior to all the things happening now, based upon the stock market and all the obligations and promises that more than likely will be broken. What are your thoughts for people who might be like wondering, okay, should I get out? Should I stay in? Should I play this thing up? Because the Dow might still go up to 60,000, but what is it worth really, in value? So for those retirees, those looking to retire based upon a narrative of buy and hold, what would you tell them?
I think if people are near retirement right now and they need to rely on this stock market going up, it might go up, it might go down. I think they're going to try to prop it up. I don't even think about it. I don't put targets on it anymore. I tell all of my lions, I call them my lions that follow my work and my trade. I tell them to trade the market you have, the one in front of you. I do not have any new core positions in this market since I told everyone I closed them the Friday before the meltdown in this market. I don't trust it right now. Maybe after earnings season comes through, we'll see what they're going to do here. This is what they need. Let's put a perspective on this real quick so people just aren't completely blind. Every day when I contemplate where this market's going to go, I don't look at the stock market first. I look at the debt market. The stock market in many ways is a derivative as to what's happening in the debt market, which is monumentally larger. Everything prices off of what's occurring in the debt market. The debt market's been telling me for a very long time that we have problems coming down the pike, and here we are right now. Okay. So that should not be a surprise. Right now, the debt market is still screaming red. It's like a flashing beacon in my face. I want to see, this is what Greg Mannarino wants to see before he will put money to work in core positions, not trading, completely different thing, holding core positions and then trading the market. Trading is in and out, day or 2 weeks, whatever. Holding a core position is you're in them, you're trying to collect a dividend over a period of time, boom. It's like more like an investment, okay? So what I want to see is the bond market stabilize. I want to see the 10-year yield get above 1% and stay there, not in an uncontrolled fashion. I want to see the 10-year yield get to 1% or above and stay there, not go back down, not do any of this kind of stuff. That is going to be a big tell to me that it might be time to put cash back to work in the stock market. Also, number 2, we got to see crude oil go higher. I called the price. I said 25 to 27 was my target price on crude for the last 2.5 years or so. We hit it. We went through it. We have a supply glut despite production cuts they're trying to get. I don't think it's going to help, but they're going to prop it up some other way. So be careful here. It's kind of a false flag event or something along those lines here. They got to clear the glut, but they got to get crude oil higher. Why? The entire energy sector and the entire financial sector are dependent on crude oil being higher. Okay. The energy sector, the financial sectors, the largest parts of the sectors of this market, they got to get a boost, and they'll get it from higher crude oil. So we need to watch the 10-year yield above 1%. That would be, okay, Greg, maybe you should open up some core positions. Number 2, crude oil higher. All right. A lot of effort right now from the president trying to goose it up. I don't understand why he doesn't understand supply and demand. It's not going to work right now. I don't care what they do. But that's the issue. So if we see these things fall into place, then we'll know that maybe we should put some cash to work in the stock market again. This is a strange time we're in, man. A really bad time. You know, our economy's in free fall. We have no economy right now. Actually, we have nothing. We're expecting millions of more people out of work. We have debts and deficits, which they're irrecoverable. The losses right now with regard to debts and deficits are irrecoverable, probably for decades, if ever. So we really need to keep our eye on a lot of things moving forward here. So, we should readdress this maybe in another couple of months, see where we're at that point here. But for those watching you here, what do I do with my cash? Do I want to get back into the market? Watch the 10-year stinking yield. All right. Let's get it above 1%. Let's watch it stabilize. Let's get this inversion out of the yield curve. And let's see crude oil go up. Maybe that'll be a signal at that time to start opening up some core positions.
All right. Well, Gregory Mannarino, it's been great again, man. I always appreciate you for dropping knowledge to the audience. And so for those that might be coming across you for the first time, they can go visit you at traderschoice.net. Got a nice little site up here. I see you've done a lot of upgrades since the last time we've connected. Yeah. And so I'll put that in the chat so people can find out about that if you're not familiar with it. And other than that, Greg, it's been great as always, man, hanging out with you. Appreciate you for educating the audience. And, man, we'll keep an eye on those things and hopefully pray for the best and prepare for the worst. So other than that, Greg, any last thoughts you want to leave us with before we dial off?
No, I think we covered a lot of important stuff. So if people can get a chance to maybe watch this 2 times and let these things sink in, sometimes things, they bounce off people, even me, I sometimes, if I find a person I like or something that makes sense to me, I want to absorb it. So maybe I'll listen to it a few times. I'll watch it a few times. I'll contemplate it on my own and say, okay, does this make sense what I'm hearing? Or is this guy completely nuts?
Well, definitely not that. So I appreciate you. So for everybody tuning in, appreciate you for hanging out with us. If you've enjoyed it, give it a thumbs up, share this video, put it out there so people can find out what's going on. And other than that, make sure you follow Gregory Mannarino on YouTube if you haven't already. And other than that, we'll keep going, keep moving forward, my friend. Thanks, Greg, once again for joining us on RTD.
And thank you too.